DC traders, been around a long time. Meet the third Tuesday of the month. Works out. We have a nice combination of experienced traders, and I think we also, you know, when we're consistent, we'll draw some nice new traders as well. Swing and day trades are welcome. Discussion topics will vary. You know, some months we'll have a dedicated speaker, others will be a little looser and open. You know, just about any topic is welcome. I've known John for 6, 7, 8 years. I can't remember how long exactly. But John used to come pretty regular to our meeting in Bethesda, and John was like more into analysis than I think anyone I've ever seen at the meetings anyway. I mean, I met a few pros that are into big time analysis, but John is, and the reason I'm saying all this is you know, he's gonna answer some questions here. So it would be great to ask him. He's a wealth of information, not only about the crypto, but about algorithms and how they're, well, I don't want to say too much about what he can talk about, but I do know that John is a really intelligent trader, and I have a lot of respect for him, and I'm really happy he's willing to share with us tonight. So with that, and he's waited a long time to be offered to do this a few months ago. We ran out of time 1 month, and then the next month I couldn't get the darn room to go. So with that in mind, finally we get to hear from John, and great to see you. Thanks.
My background's in engineering. I'm a mechanical engineer, which is why I have a very methodical approach to the market, where I really like to throw everything in spreadsheets, do the math, do the heavy statistics. And I think it is to an extent a huge advantage to have a mathematical background, a technical background, because you could do the statistics, you could prove things right or wrong. If there's a myth that something's true, you could actually sit there and do it yourself. But I would also say being an engineer was a huge disadvantage to an extent, in that the markets are quite often influenced by psychology and behavior. And as a mathematical guy, as an engineer guy, I always said, no, it has to be math. It has to be numbers. You just look at the charts. Don't put your opinion on it. Don't worry about fundamentals. And it took me a long time to realize that there was a huge gap in just understanding psychology of the market. So I would say engineering actually held me back in that extent, in that I thought I had a solution already versus trying other things that may not have been easier. So that's generally my background. I've been with the group, I think, since 2014 or 2015, back in Bethesda. And I did a lot of jumping around between strategies, which a lot of people say is bad, because you spend a little bit of time with a strategy, then jump to another and another, and you never really spend enough time understanding that strategy, because you're just jumping around. It's like, oh, it didn't work for 3 weeks. It didn't work for those 4 trades. Let me just try a whole new strategy. And that was bad to an extent, but I'm at the point right now that I have this huge library of strategies in my head that I know that don't work. And my current strategy, what I've been doing for the last, I think, year and a half, is actually basically the opposite trade of what I would have taken from my other strategies. Because if they didn't work, well, obviously, if you take the opposite trade, it would work. So there was an advantage to strategy hopping after all, but you have to write everything down, take notes, make sure that you got your statistics on yourself. So you're not just doing statistics on a company, you're doing statistics on yourself. Like, where do you make a mistake? Do you revenge trade? Do you get greedy? What do you do when the news is really scary, etc. So my method of trading, you could sum it down to swing trading. So I'm looking at a hold time between a few days to a few weeks. What I basically do, I like to call it algorithmic trading, but it's not like computers just running around doing everything. It's basically an equation, a really large equation in a spreadsheet. which factors in all my strategies. And so every day I spend, I want to say 1 to 3 hours just analyzing the markets, just collecting data. This is manual collection of data. I throw it into the spreadsheet. And at the end of the day, the spreadsheet tells me what to do the next day. So if it says buy 30% into something, then you buy it, or sell, then I sell it the next day. So there's very little emotion involved, very little gut feeling. When I analyze the data of the market, there is some subjectiveness. Like, for example, is the news bearish today? Well, there is some subjectivity to that. And eventually I want to get that, not having my opinion in it as well. So it works really well. And when it doesn't, I'll sit back and I'll modify the equation, make it a little better, and then I'll try it again. It can be boring sometimes because there are periods where, say, 3 weeks, it just says sit in cash, just sit in cash. And usually that's when the market's moving horizontally anyway, or it might be just pulling back in a bullish market. You just sit in cash. And it could be really boring because you're spending 2-3 hours a day analyzing the market and you don't put in a single trade. And there was even one period where it's 2.5 months, not a single trade. The market was basically horizontal the whole time. But it's really boring, so you got to learn to sit on your hands. But you know, we're not into trading for fun. We're in it to make money. And if you are in it for fun, you're probably going to lose money. Anyway, that's about me. So I'm going to basically do a Q&A on crypto. So I don't have a prepared presentation. I'm not going to really focus on anything. I'm more of just going to take your questions, expand out on it, and go from there. But if anybody has any questions on crypto now, I could start from there, and we'll see how it goes.
I have a question. There are several cryptocurrencies. Do they tend to follow one another, or are they very individual where you might have one going up and another one going down?
All right, it's a very good question. To answer that question, but in relation to the stock market, the experts generally say that if you're going to buy a stock, you also have to follow the market. So if you really like the stock, you think it's going to go up, but the market is bearish, you just wait. And that's generally because when the big guys get in, they need to diversify. They move their money everywhere. And so if they're buying one sector, they're generally buying other sectors as well. And that's the same for the coins. The coin market is still, in terms of capitalization, very small. So if you have these big hedge funds moving in, they would take up a huge percentage of the coin. It would move the coin pretty fast. So they can't really put all their money in one coin. They have to diversify. And generally, it's just like the stock market. The market generally moves together, but you'll have bullish coins move up a little more and down a little more with the market. Bitcoin would be the SPY of crypto right now. It's the biggest coin, largest capitalization. Ethereum is getting closer. I think it's about half the capitalization of Bitcoin. And eventually Ethereum will take over Bitcoin. So if you follow SPY in the market to get your bias, if you're going to trade crypto, you want to follow Bitcoin and Ethereum as well.
So can you explain, John, this is something I still don't understand. Are you do you buy Bitcoin and Ethereum, and how do you do that? Do you buy Grayscale, or do you buy plays like Riot and Mara? How are you actually trading it?
All right, there are a few ways you could do it. There are exchanges. Let me back up a little. One reason why I got into cryptocurrency is because I realized my revenue would not be diversified. So let's just say hypothetically they turn off the stock market, and that does happen every now and then. I think the last time was 9/11. It was off for like 10 days. They turned it off for like a month or two during World War I. And so I'm just a little concerned that maybe the government would issue some awful law that would make trading less profitable. For example, I think there was a fee for day trading that they were considering. So to answer your question, there are exchanges to trade on. So the biggest one is Coinbase, and then there's also Gemini. Gemini is literally a copy and paste of Coinbase. They copied exactly how Coinbase did. Even the third parties, they're using the exact same third parties. But Coinbase and Gemini are legit US-based companies. They're completely tied in with the IRS. So if you wanted something secure that you're not worried about any fraud, Coinbase or Gemini. If you're outside of the US, there's Binance and there's some others. There isn't nearly as much regulation with the crypto market. So if we're going to talk about the stock market and go back 150 years, that's pretty much what the crypto market is today. There were a lot of sketchiness going on. There were bank failures. People would put their money on a broker and then a broker would fail and then you lose all your money with your broker. You can't have that anymore because you have FDIC protection, but you don't have that protection with crypto. So if your crypto broker goes bankrupt, you can say goodbye to your money. So you want to diversify if you're getting into any exchanges. So to answer your question, one, you got the exchanges so you could directly trade the coin itself, or you could do a roundabout way. One would be going through a company that has heavy crypto exposure, for example, Riot, or you could buy the Coinbase stock, COIN. They have heavy exposure. So if the coin goes up, any company that's also holding that coin, their value would also go up because the value of their assets go up. You could also get what's called an ETN, which is kind of like an ETF, but I'm not so technical on the ETNs, but basically it's a holding company that holds, all they do is they just hold large quantities of a coin. So GBTC, all they do is just hold the coin. Now there are expenses to that. They have to pay for lawyers, they have to pay for security, they got to make a profit. So it's not going to, in the long term, go up as fast as the coin itself because there's that drag of expenses. There's also ETHE, which is by the same company, Grayscale, and all they do is hold Ethereum. That's it. They also have other products that are also only available to hedge funds and the big guys, but eventually they're going to open it up to other coins as well. I hear they're going to do a Dogecoin and a Litecoin and all those others. These ETNs, they don't always track the price of the coin. There have been times when Bitcoin would go up by a factor of 300% and GBTC would only go up 200%. They're not perfectly tracking. So you need to be aware of that. So if you're a technicals guy and you're looking at the technicals of GBTC, don't assume that's going to be the same for the actual coin itself.
Thank you.
Hope that answered your question. All right.
Yeah, no, it was great. That's great. Also, one other quick question, and then I'll let other people ask. I read the other day with Ethereum, there's something coming called the merge, but I haven't had time to research it. Do you know anything about that or?
All right. And this is probably going to answer somebody else's question, so I'll go into a little detail as well. I describe coins in terms of generations. So generation 1, gen 2, gen 3. This is specifically more for the mining aspect of it. So generation 1 was the first coins that came out. So you got Bitcoin, Monero, Litecoin. They're fairly crude technology. They came out 10 plus years ago. So there's a lot of new features that have been added to the new coins that are coming out today. So the generation 1 coins, you would mine them using a CPU, just like any CPU in a computer. Well, some really smart people decided that if they spent a few $1 million, they could custom design a CPU that's super efficient at mining. And the thing is with mining, your biggest expense is really the electricity. So if you have a super efficient miner, you can mine it with very little cost. And what ended up happening is a few companies monopolized the whole mining industry because it takes millions of dollars to design your own CPU and to manufacture it. So that's generation 1. And the coin developers were like, well, it's not distributed system if one Chinese company controls all the mining. It's literally controlled by one company. So they invented what was called ASIC resistant, which basically means that it's very difficult to mine a coin with a CPU. So you can't have a company just custom designing a CPU anymore to do mining. And the idea is that you won't have these monopolies anymore. Well, anyway, some smart people came in and realized that you could get your GPU to do mining. So that's the graphics processor that you can use for playing video games on your computer. And there's no company monopolizing the production of GPUs. You have AMD, you have NVIDIA, and you
NVIDIA.
could even trade. Well, I wouldn't recommend anymore, but there were people who would buy those companies when mining was good, because those companies would sell out of graphics cards whenever mining was big. So I would, if I wanted to play that idea, I would buy NVIDIA. They would sell out of cards, and I would somehow profit when the coin goes up. So that's generation 2 GPU. But the problem with mining is, one, you're wasting electricity, which is an expense. You have to buy either GPUs or ASICs, which are thousands of dollars. Like one GPU mining unit could be $8,000. And then your miners also have to make a profit for all their time spent on it. So there's this huge drag, a huge waste that produces absolutely nothing of value. And so the idea was, okay, let's redesign our cryptocurrency to where it doesn't need mining anymore. And there's a bunch of different algorithms out there. The one that involves mining is called proof of work. You're proving that you've solved a mathematical equation, proof of work. But the new one that's really popular, and I think it's going to become the next big thing, is called proof of stake. And with proof of stake, there is no mining anymore. The idea is that you own some coin, and then you're allowed to vote for what the next transaction block will be. So whenever transactions occur, it gets stored in a block of data, and only one person is allowed to write that block. And it's done algorithmically on your computer. But the idea is that if you own more of this coin, you get more votes. So if you own half the coin, you get basically half the votes. And the idea is that you're not going to cheat the system and destroy the value of something if you own significant coinage of that. So if you say own 50% of Ethereum, you're not going to cheat the system and destroy the value of Ethereum, because you just lost billions of dollars. So the more coin you have, the more stake you have in the system to being secure and legitimate. And so Ethereum has been working on this for, I think, 5 or 6 years now, and they promised that they were going to move from a proof of work to a proof of stake about a year ago. So they would no longer have mining, but they've been having difficulties. They've been finding bugs. They don't want to move to a system and then find a major bug that causes the whole cryptocurrency to crash. That would be really bad. So they're taking their time. They're being very careful, very cautious. And the last time they promised they would move to proof of stake was about a month ago in August, and they delayed it again to December or January. But this is really big. It's called the London fork, moving to proof of stake. It's a really big thing for Ethereum. There's a bunch of other coins already using proof of stake. Ethereum's just a really old coin, so it started off with proof of work. But I think basically all coins going forward are going to be moving to proof of stake. It is the future. If you look at the top, say 100 coins, only 12 of them still do the old generation 1 proof of work. The other, what is it, 88 of them, they're using other proofs. I think about half of them use proof of stake now.
Huh.
Did that answer your question? Did that make sense?
Yeah, yeah. So are you saying the electricity costs are going to go away with no mining?
So when they move from proof of work to proof of stake, all that electricity will no longer be wasted. There's no mining anymore. Basically, your GPU mining rigs that you have will be very expensive paperweights.
Very expensive what?
Paperweights.
Paperweights, huh?
Yeah, because you can't mine with them anymore. I mean, you could sell your GPUs on the aftermarket, but it's an old technology. So proof of stake, I would call it a generation 3 technology. All the crypto coins have what I like to call special powers. It's a special thing that coin does that the other coins don't do. It's their story. It's like every penny stock has their story. Every company has their story. Every crypto has their story as well. So they all have special features, and you have to really study it. There's about 5,000 different coins. I don't know if you guys realize it. 5,000 coins.
No.
About, I would say 4,800 of them are garbage. They're basically the equivalent to penny stocks. They're not going to go anywhere.
Huh.
can I be really ignorant for a couple of
Yes,
seconds?
I'm trying not to be too technical.
Well, I mean, and I get what you're saying. It makes a lot of sense actually. But I've never quite understood what Bitcoin actually is. You
All right.
know, I know it hit and everybody got hot on it and blah blah blah, but I never paid any attention to, and I still really don't. I mean, I see the stock tickers that I know are somehow tied to Bitcoin that I play sometimes because the gap in the morning, like the Riot and the Mara and the Coin, but I have no idea what they are. I mean, but I don't know what a stock is either. But I just play the patterns. But I'd love to know like what is a coin? You know, what's the value in it? How is it like what's its essence? You know, like I know a stock has its essence in a corporation somewhere that's publicly held that, that has revenue of some sort. But I don't what's a coin?
Well, from a trader's perspective, you could, at least for the strategies that I do, maybe for other strategies this won't be true. You could basically just trade them the same as you trade stocks, where you don't really need to know the company, especially if
Right.
you day trader. Now, I'm sure there's little idiosyncratic, what's the word? Basically, special things that would only happen that you might not see in stocks. I'm not a day trader, I couldn't tell you. But from that perspective, you could just trade it like any other stock. Now, to answer your question, imagine think of cryptocurrencies as kind of like a credit card company, but everybody's account is public. So picture there's a million different people that have their accounts with a crypto, let's say Bitcoin, and think of it just like a credit card company. And they have this big spreadsheet. And this spreadsheet has every single transaction on it. And it's completely public. Literally anybody could go in and look at it. So if you own an account with Bitcoin, and I know your Bitcoin address, which is the equivalent to basically an email, I could see exactly how much money you got in your account. It's completely public. In fact, a lot of governments like crypto because it makes it very easy to track their citizens. You can't do that with a paper dollar. If I give you money, no one's going to know I gave you money. But if I give you crypto, it's on a public ledger. Anybody could check it. So picture a spreadsheet, has every transaction on it, and the computers know how much you have because they look at every transaction. And it's verified by one person. Well, it's written by one person. So every coin has their own rules for this. But let's just take Bitcoin. So Bitcoin adds, I can't remember the exact time now because they keep changing it. But let's just imagine once every 5 minutes, they add a new set of transactions to the block. Now the block is the chain. Back up, sorry. All right, so each new set of transactions is a block, and then you have a chain of these blocks, hence blockchain. So a chain is the whole history of all transactions that have ever occurred, and new blocks are added at every fixed period of time. So each coin has their own period of time. Some are within seconds, some are within minutes. So if we make a bunch of trades between all of us within the next minute, that will all get included on the next block that goes on the chain. Anybody could check it. Now there's only one computer or one person that could write that block at each time. So there's say millions of miners, and the job of a miner is to write a block. And if you're confused at any time, let me know. I'm kind of like making this up as I go, the explanation.
You could be from
So,
what I know.
all right, so imagine there's a million miners. There's a million people mining Bitcoin. Only
And
one
they
of
do
them could,
this on their CPUs?
well,
Like-
they have special machines that do it now.
Okay.
Special machines that they're buying from China. So imagine there's a million people mining it. Only one of them could actually write the block for each cycle. All right, so the question is, who writes it? Well, that's what the mining is for. You're solving, so for Bitcoin, you're solving a complicated math problem. And it's really, really, really hard to solve this problem. And whoever solves it first gets to write the next block. So sometimes it might be solved within the next 5 seconds. Sometimes it could even take a day for it to get solved. But as soon as it's solved, that miner could write the next block. And the reason why it has to be random like that is because if there's a bad actor that just wants to write in that he has $1 million, he's just going to start writing it right away. So by having this mining, it's basically a security for the system that only one person can do it. And once he writes the block, all the other miners algorithmically verify that what he did is legit. So mining is basically providing security for the system to make sure that a ledger that's public that everybody could read, anything that's added to it is completely legit. So imagine you have a big spreadsheet and 1 million people are looking at it, and then one guy's at the computer and he's entering everything. Everybody else is watching him. And each time a set of transactions go on, the next guy goes on and the next guy goes on. That's how the proof of mining works. Proof of work mining happens. And then you got other algorithms that do it in a very different way. But yeah, just think of it as a credit card with a public ledger and anybody could read it. Now, the caveat to that is that there are encrypted currencies as well. There's one called Monero, completely encrypted. So if I know your address, I can't see how much money you have. Governments don't like this, and so they've banned it around the world. Someone's phone's going off. So there's, for example, Monero is an encrypted currency. It's the generation 1 cryptocurrency. The US government will blacklist any financial institution that allows you to purchase or trade Monero in any way. So even though the US government can only ban it in the US, any bank around the world that wants to deal with the US banking system will also have to ban it. So the US by de facto has basically banned Monero around the world. Now you can still trade it, but it would be very difficult for you to do it using legitimate means. I do think encrypted cryptocurrency is the future. There are people working on technology that will allow you to basically what's called a decentralized exchange. You could exchange between one cryptocurrency to another without a middleman. And the technology's here. It's still in beta version, so I'm still afraid of trying it. I might lose my money. But eventually banks are going to be cut out as well from the whole process. But yeah, just know that when you purchase a coin, everybody knows you have it. If people are interested, you can ask me later. There are even ways that you could hide your belongings as well that make it very difficult for you to get tracked. And if that still didn't make sense, just ask. Just ask again.
How is it created in the first place? Like, what's the magical creation?
All right, so there are 2 ways it's created. One is the initial creation, which is usually called the Genesis block. So when they first create the coin, it automatically starts with a certain amount. And usually what happens is the owner just gives it away, or he'll sell it for other cryptocurrency or money is basically an investment. So let's say someone invented this new coin. You really like the story. You really like the idea. He says, you could buy this new coin for US dollars or for Bitcoin or for Ethereum. And if the coin works out, the coin you have will go up in value. And if it doesn't work out, it goes to 0. So that's the first way. That's how it gets distributed and created. And then after that, more coin gets created through mining. Or if it was a proof of stake, it would get created through what's called forging, where it's basically an interest rate. So with mining, they give out X amount of coin to miners as a reward to providing that security to the network. And then the miners would eventually sell that coin on the exchange and other people buy it, and that's how it gets distributed. And so every month, new coin is being created algorithmically and distributed to miners. Now, if it was proof of stake, anybody who's staking their money, they collect an interest rate. And that interest, for example, if it was Ethereum, I believe the interest rate is 6% right now. Which is nothing compared to a 200% gain a year, 300% gain a year it makes in it. But hey, it's an extra 6% free. So that's how it's also created. A lot of the coin creators are very knowledgeable on inflation. They realize inflation is a really bad idea. So they don't want to dump large amounts of currency onto the network because they understand it will devalue it. Unfortunately, most people don't understand deflation, where people don't want to get rid of their coin. They don't want to use it because the value just goes up and up. And basically, no one's going to want to exchange a deflationary currency because you make far more money just holding it. Unfortunately, a lot of these coin collectors, coin creators, they don't really understand deflation. So they've made it so deflationary that the value just skyrockets like crazy.
So I want to ask two quick questions, piggybacking on Rob. So I still don't understand. His question is, what is a Bitcoin? So are you saying a Bitcoin is the result of a mathematical calculation? Is that what it is? And the other question is, who creates these mathematical problems? Where are they coming? What's the origin of those? What's the source?
All right, so there is no coin. There's no digital coin either. It's literally just a spreadsheet with numbers on it. So if I want to buy, say, 5 coin, I put in my $5 in exchange, and then it writes on the spreadsheet 5 coins. It's just a number on a spreadsheet. That's all it is. Now, for these mathematical problems, that's only for mining. If you're not involved with mining, you don't even need to understand it. Basically, there's an algorithm that, how do I say it? So for Bitcoin, it's a very difficult mathematical problem that would require, let's say there's a million computers solving it right now. It'll take several minutes for 1 million computers for one of them to actually solve that problem. These problems are just algorithmically generated. Once one is solved, the next one is automatically put out, and then everybody's miners are just sitting there trying to solve it. The problem is so difficult to solve that it's not moving around equations. You have this one big equation and you're just guessing values. But picture algebra. Picture this insanely large algebra equation that it's just impossible to solve for B in this equation. So all you could do is randomly guess values in this equation until you finally figure out what the answer is. And so you have 1 million computers randomly guessing values until one of them guesses it correctly. And it's designed to be as difficult as it takes for a certain cycle to pass, for example, several minutes. If computers are solving it too fast, the mathematical equation will actually get harder. If computers are struggling to solve it, the equation will automatically get easier.
Wow.
All right, if you're
I
still
have to
confused,
process
you
all
could
that.
ask again.
I gotta
Anybody else is
process
not
all
certain.
that. Rob, did he answer your question? I think he did.
Well, yeah, he answered. I still don't have a grasp on where the value is, but I understand. I don't understand how a corporation trades at 60 times earnings either. But I understand there. But I struggle with, but that's my problem. It's like where's the value other than someone else is going to buy it from you if you want to sell it.
Where's the value in a US dollar? It's just a piece of paper.
Yeah, right. I know exactly.
Yeah. Think of crypto as a combination of stock and currency. It's not, I mean, it has its own story. It has a special ability. It doesn't just sit there like a lump of gold or paper dollar. It actually does other stuff. So it does have some value like a stock, but it could also be traded like a currency because it can't just be manufactured out of nowhere. It's almost like gold. It's either there or it's not. You can't manufacture gold. So it could be used as a fairly stable unit of exchange that people just give value, just like they give value to gold or give value to a paper dollar.
Yeah,
I have a question.
Yeah, Carl.
You got my curiosity when you brought up this. You said the Bitcoin is just really your name in a spreadsheet. Let's say you give me, this is going to take me a minute to get out. You give me a Bitcoin. I can move that Bitcoin around. I can put that Bitcoin in wallet A, or I could put it in wallet B or in wallet Z. I can move it around. So you kind of lost me when you said it's just a name in a spreadsheet. Does my, is something on that spreadsheet change when I move my Bitcoin from wallet A to wallet B?
All right, so the spreadsheet actually tracks transactions. And when I say name, I just use that to make it sound simple. It's actually a very long string of random characters. I like to think of it as when you go into your email account, you type in your email address and you type in your password. So crypto is very similar. You have one long string of random characters, that's your username. And you could share that with anybody, just like your email address. Here, email me, this is my address. Here, send me money, this is my address. But then you also have your password, which is another very long string of random characters, which is private to you. So anybody could send you money, anybody could send you an email, but they can't actually access it unless they have that password as well. So if I were to send you money, it would be recorded that there was a transaction of X amount of coins going from address A to address B. And if I were to go onto what's called a block explorer, if I knew the address, because you gave me the address for me to send it to you, I could just look up your address, and then the block explorer will tell me all the money that you have stored on that address, secured by that password.
Okay, so let's say you give me a Bitcoin. You have a password when you own the Bitcoin, and then you give the Bitcoin to me. Do you give me the password or do I create a new password?
Nah. All right, so you set up a wallet, and that wallet will have two things: what's called a public address, like your email, and then the private address, which is basically your password. So if I'm going to send you money, all I need is your public address, basically your email. It's like me sending you an email. I just need your email
Okay.
address. So I could send you anything, but you can't take what I have unless you also have my password.
Okay, now my next question, and I'm not sure if you can answer this, but I want to throw it out there. And it involves security. During this gasoline pipeline ransomware issue we had, I don't know, 3 or 4 months ago, they paid in Bitcoin to these Russian hackers and bank robbers, you can call them. And then sometime later, I think it was the FBI or some agency within the US government, was able to recover some of those Bitcoins, some value, substantial value of it. And what worries me is if anybody can get into my wallet and take my Bitcoin, why would I ever own a Bitcoin?
All right, that's a good question, and I'm not too familiar with the case. There was a lot of the organizations investing it were not divulging all of their methods, probably because they did not want bad actors to bypass it. But the first mistake these morons did is they used Bitcoin. So Bitcoin is completely traceable. It's a public ledger. Anybody could read it. So if they were going to exchange their Bitcoin anywhere, the investigators would clearly see where it got exchanged. So if they went on a public exchange, say Coinbase, to sell their coin to US dollars, well, it clearly went to an address held by Coinbase. Coinbase actually has access to everything because they basically have a wallet for you and they own your wallet. So if they use Coinbase or Binance or any other company, the FBI and whoever else could have just gave them a phone call and said, hey, we traced the Bitcoin going to this account. You need to freeze their assets. Now, if you weren't holding your money on an exchange like that, there's no way they could access your currency unless they could somehow get a hold of your your password, your private address. Now they could do that by hacking your computer, just traditional hacking. The same way if I were to hack your email, they could also potentially hack your crypto. For example, installing spyware on your computer. Or for example, I don't know if you're familiar with the Tor network. It's basically a way to securely access websites. Well, a lot of these Tor network nodes are compromised. No one knows for sure who it's compromised by, but you would assume that the NSA has probably compromised these nodes just to spy on citizens, you know, the normal government stuff. So the traditional ways, they can still get a hold of your key. So if you're going to hold this coin and you don't want anybody access to it, treat it like the password to your bank account. Treat it like the password to your email. And if you're going to do something illegal, don't do it on something with a public ledger where everybody could read it. You would want to use something like Monero, which is encrypted, which is one reason why they're banning it, because a lot of shady business goes on with encrypted currency as well. Did that answer your question? If not, you could explain a little bit.
Well, yes and no. I would never want to hold a Bitcoin because I know it can be stolen. And this example, and I know the US government has extraordinary capabilities, but there's a capability to steal a Bitcoin. And so I would just never own one for that reason alone. And so I'm kind of in the camp, the Robert camp, of not really understanding the value of Bitcoin. Now you mentioned there are follow-on generation of coins. Maybe they're more secure than Bitcoin, but that news story told me Bitcoin is not secure. It's just not. So I wouldn't own it. But moving on to another subject here. Somebody else has a question. The last time we had the subject of Bitcoin, a gentleman came on and I asked this very basic question because I knew nothing. And I said, Bitcoin was worth about $34,000. How do you buy a cup of coffee with something worth $34,000? And he explained to me that Bitcoin is fractional. And so I after the meeting, I looked it up and saw that it's fractional to 100 million parts. 100 million fractions make up one Bitcoin. So if I have, let's say I have a whole Bitcoin and I decide I want to buy a cup of coffee, and I want to buy a cup of coffee every day for 60 days, and it costs me one fraction of a Bitcoin. So after 60 days, I've consumed 60 fractions of my Bitcoin. It seems to me every Bitcoin that's ever going to be generated, it's ever created, is going to be divided up. And pretty soon you're not going to have the original Bitcoin, and maybe you can accumulate 100 million fractions and you've got a whole new Bitcoin. But I am lost as to how this spreadsheet is tracking literally billions of transactions. It blows my mind. And so it seems to me you're really not holding a Bitcoin, you're holding a bunch of fractions of a Bitcoin. Is that correct?
Yeah, that's correct. Your understanding is perfect on that.
Good. Okay.
All right, to just go back a little bit, your bank account is actually less secure than a crypto account, because your bank, any government could immediately just apply for a warrant to get complete access to your bank account. They could freeze your assets like that. It's every day for the government. But
I'm
for
not worried.
crypto,
I'm not worried
for-
about the government freezing my
Yeah.
assets. If I'm a criminal, yes, but I'm not a criminal.
yeah. So for crypto, you could create a wallet and you'll have your public and your private address, your password, and literally nobody would ever have access to it. Unless of course you're hacked, but your personal bank account could also be hacked. So it's completely secure in that sense. Now, if you give away your password, of course you could lose it. Now, the one disadvantage to crypto, and this is what you're probably alluding to, is that if it was a US financial system and some funny business went on, you could give a call to your bank and say, hey, I was hacked, can you reverse these charges? Or hey, my credit card was stolen, can you reverse these charges? There's nobody that's available to reverse charges for crypto. Now,
Right.
the best you could do is if you're a rich guy and you got connections, you can say, FBI, can you send a warrant to Coinbase, the freeze exchange, and then maybe recover some of it? Yes. So yeah, that is one big disadvantage is there's no middle guy to fix things when you screw up or when a bad actor somehow fools you.
I just wanted to add a note, Carl. I would disagree with you on one thing. I would be worried about the government freezing assets in a bank because that happened to me. There was a bank, and I don't remember the name, but I think it was First Bank of Maryland, and it folded. This was years ago. I think it was in the 80s. And I had an IRA in there, and I couldn't get it for like 2 to 3 months. And I was not sure I was going to be able to get my money. I was really worried about it. So those sort of things can happen. I just wanted to point that out because I remember the experience of going through that and thinking I'd never see my IRA again.
Well,
That was the savings and loan debacle that took a lot of those institutions out. John, I want to make a comment about when you said think of Bitcoin as currency and gold. And you have a lot of countries, and El Salvador has been the first, and there's about 20 other countries in the next 60 days, 90 days, that are going to convert their currencies over to Bitcoin. And because there's a limited number of blockchains, if you will, what happens when all of Latin America, all of Europe, and a lot of countries start converting their currencies over? Aren't we going to see Bitcoin go from 50,000 to say 5 million?
And if Bitcoin was the only cryptocurrency, yes. The thing is with fiat currency is typically every country would only have one currency. And so the government has monopoly on it. So if it's a crappy currency, it has serious inflation, you're stuck with it. But with cryptocurrency, if you don't like one coin, you swap to another. If you think this one coin is too inflationary or too deflationary, you swap to another. And new coins are being created all the time. So I personally think Bitcoin is going to go obsolete in the next 10 or 15 years. And that's the whole conversation in its own. But you basically have a form of inflation in terms of creation of new cryptocurrencies. So right now you have X amount of currencies being used, but let's say someone invents this new amazing currency. Everybody's going to move their money to this new currency. So, I mean, if all they're going to buy is Bitcoin and Ethereum, sure, but I see these countries eventually diversifying as well. You basically have an infinite amount of possible coins out there because they could always create a new coin out of thin air, basically. Any other questions?
So John, this is really great, by the way. This is like, I know it's just scratching surfaces here and there, but I'm actually beginning to understand just a little bit of what's going on, which I really appreciate you doing this. Is there like to someone like me, is there an advantage or significant disadvantage? I mean, I don't say I have some core holdings. Is a blockchain something one might consider as a core holding? Compared to for day trades, I'll basically take anything, as long as it's got liquidity. So I'm not as concerned about that, but for longer term tradings, I really only want good, good companies that that I don't know the fundamentals, but I like them to be there. I can't evaluate them, but there's plenty others that can, that say, yeah, they're fine. Is there in you, and I know this is opinion now, but is there a long-term advantage to owning something that's blockchain versus a stock? Is it good to have in a portfolio, in your opinion? Is it not? And then with day trading, is there any specific advantage or disadvantage, or is it the same? I mean, I can't see much difference in day trading. You're in and out.
I am very biased on this.
Yeah, no, that's,
Just know that.
yeah.
If I was to approach it as I wanted to just save some as more of a longer term holding, what you want to do is go to a website, coinmarketcap.com. You're basically looking at the capitalization of the coins. And I generally tell people, if it's not in the top 100 coins, it's a penny stock, it's garbage, it's too risky. But if you go to coinmarketcap.com, you'll see Bitcoin, then Ethereum, and then some other coins. If you're going for a long-term hold, and long-term meaning at least, 10 years going out at least, then the top 5, the top 10 coins are safe. They're basically I can't think of it. It's like the FANG stocks of stocks. They're the top ones. So they're very secure. They're well proven. They've been around for a long time. They have a huge capitalization. There's a lot of people that are invested in it to make sure that it's secure and it's stable, and it goes on. That said, right now your retirement is probably in US currency. And we generally think of US currency as pretty stable, although we had, 8% inflation in the last year, which is not good. But imagine inflation being 8% every year. You're going to lose a lot in your retirement. So you want to store your value in something that's not inflationary. I think fiat will always be around. I think the US dollar will be the last fiat currency to ever die if fiat does die, because the US dollar is the most secure. The problem with cryptocurrency is it's very volatile, it's very inflationary and then deflationary. It moves around a lot because it's being controlled purely by supply and demand. Whereas fiat currency, you could call them puppet hands that are changing the value to try and stabilize the currency. So in an ideal world, your fiat currency would be very stable, say just 2% inflation per year. So if they notice that the value is going up or going down, they could control that through printing of the currency. They could control that through interest rates. And so the value of any currency would be something that's a stable value. The problem with crypto is it's not a very stable value, so it doesn't solve one of the purposes of a currency. Fiat currency, if it's stable, would be fairly valuable. Now, if one day it's not stable, they're throwing a lot of inflation around, they're printing a lot, it's not controlled, then it loses that one value that it has, which is stability. So just in terms of diversification, having just one asset, the US dollar, is not a good idea at all. I would say diversify. And from my bias speaking, I think cryptocurrency is the future. I don't know if you guys are aware of, but the US dollar has only been around for 150 years. I don't think you guys could even imagine how we bought stuff before the Civil War. And there were actually people that were against the US ever having a currency at all, believe it or not. And so just like the US currency changed the world, changed the country, I think cryptocurrency is the next huge technology that's going to change finance big time.
Okay, can't argue with that.
Yeah, you made an interesting point when you said that there were people who were against the US having its own currency. And I very quickly, my mind started going down that road of what if we did not have a US currency right now and it was proposed that we go to one? I can just imagine how Twitter would light up. You know, the government's trying to control our finances. Wow, that was a really interesting thought when you said that.
It just a useless fact, but every Democrat in Congress actually voted against having a US currency. Every Democrat in Congress. I'm sure the Democrats were completely different from they are today, but I read their arguments. I actually read their essays of why, and they had some fairly valid arguments. Before then, countries would create currency, but they didn't quite understand inflation. So whenever they ran out of money, they just printed more and more, and eventually their currency became worthless. And there was 50 other countries before the US currency that destroyed their currency through inflation. And so anybody who understood history were like, well, that country failed and that country failed and that currency failed because of inflation. So they were against it because they thought the US would also do it, but they didn't quite understand inflation back then. I mean, the whole concept of supply and demand was only discovered, what, 20 years before that, 30 years before that.
By the way, the two parties have flipped. What used to be Democrats were Republicans, what are Republicans? What were Republicans are now Democrats, and so forth. So they have flipped over time. But I would just love to sit down and pour out my thoughts on, writing some comedy routine about creating a currency for the
If you're really interested, go onto YouTube and just type in "what is currency," or look up Milton Friedman, "what is currency?" And it's a very interesting concept of what currency really is. People would even trade tobacco leaves as currency until, of course, they realized they could just literally grow more money, and it didn't work out. But it's just very interesting to understand.
I think it would be a very interesting Saturday Night Live skit.
Yeah, for sure.
So I have a question.
All right.
Go ahead.
Yes. I wanted to know now with the cryptocurrency supposed to be, I guess, the currency of the future. Now, will the government try to control the cryptocurrency? Do you see that in the future?
That's a very good question.
Because I saw a couple of articles where they saying the IRS now, they trying to start this in 2022. If you take out over $600 out of your bank account or ATM, they want you to notify the IRS. I saw 2 articles on that. I don't know how true it is, but they're trying to start that next year. So with cryptocurrency being a future currency, and then I heard that Biden was trying to tax that and trying to control that. So how do you see that? The government controlling everything?
Well, we could talk about China. So China's banned all cryptocurrency. You're not allowed to have an exchange. You're not allowed to mine. You're not allowed to own any cryptocurrency. And that's because China needs to control the people. So they invented their own cryptocurrency. I think it's called CBDC, Central Bank Digital Currency. But you can look it up. So China has their own digital currency now. And governments actually love digital currencies because they're public ledgers. If you want to track your population, you want to control them, you want to figure out what political dissidents or activists they're doing, they want you to use crypto because they see how much money is in your account. It's completely public. They can't track paper money. If you're giving paper money to a political activist, they don't know where that money's going. But if you're sending cryptocurrency, they see exactly what's going on.
I'm sorry, not to cut you off. So basically everything is just going to go to cryptocurrency. It's not going to be paper anymore in the future. Can you see that?
So, all right. So talking about your tax situation, the government's always trying to figure out a way to tax you. It's just the 2 things. What is it? Death and taxes, the things that you'll just have to accept.
Mhm.
So the issue with fiat currency, government issued currency, is that if you end up with a bad government and they run out of money, they just start printing more money. Inflation is effectively a tax on the people that most people
Mhm.
don't understand. So if they run out of money and their budget deficit's 10%, they'll just print out 10% more money. But that
Mhm.
devalues the currency, so your spending power is 10% less now. So if you don't want to pay that extra 10% tax, you move to a currency, you move to something that does not have, it's not affected by inflation. Now, you could also buy something else other than digital currency. You could buy a land or a house or maybe stock or something, but they already tax that as well. So
Mhm.
it's all the bad things that government could do, they no longer have the ability to do those bad things with digital currency, because digital currency is controlled by an algorithm. Everybody can see the algorithm. It's like a law that's written and nobody could break. And if you don't like that law, you could change to a different cryptocurrency.
Okay.
So I think the US dollar is the most stable, the most valued currency in the world. So it's
Mhm.
probably going to be the last currency to die off in the future. So other countries like Laos or Vietnam or Ecuador, their currencies are pretty crap. So they're going to immediately move to something that's stable because their governments just can't manage the currency. The US government does a good job. So I see the US dollar being there for a long time. Um,
Okay.
as for that $600 thing, my understanding is it was a proposal that I don't think will pass. It's a bureaucracy nightmare. I mean, there's so many
Oh my
people
God.
moving money around. How are they going to manage that? How are they
Right.
going to tax it?
Right.
The cost of enforcing that is going to be greater than the value of tax they get back. But they'll probably say, okay, not 600, we'll do it $2,000. We'll compromise at
Mhm.
2,000.
Mhm.
Um, but
Well,
again, if you don't like the way the government's managing the economy or the money, you just move to a cryptocurrency.
Right. Okay. All right.
Huh. Any other
Any more
questions
questions?
before we wrap up? John, this has been terrific. Really appreciate it. I've learned a lot, that's for sure.
John, is there anything else you think we should know? You know,
Um,
like the most important thing?
if you're going to get into trading, learn with just one asset to start off with. Don't jump around between different assets like forex and housing and stocks and everything. You just need to figure out all the basics first. But once you get good at one asset, a lot of the skills that you learned are transferable to others. And I would recommend just diversifying your trading at least into another asset, just in case if your current asset has some issue. Either your strategy just stops working for whatever reason, or some awful government edict makes it difficult on you. But yeah, if you start off with stocks, just stick with stocks until you get good at it. And then you could move over to cryptocurrency later for trading.
I know what I wanted to ask. Is you know what I trade, the only thing I know how to do is read a chart. I mean, it really is. And I'm good at reading a chart. Are you know, and it doesn't matter what chart it is. I mean, I can generally read it, and you know, 99% of the charts I see, I'm not interested. But you know, then you see a good one, and that's the one, or the two, or the three. Are first off, I'm assuming that these currencies have, you can get charts, right?
Yeah, you
But the
just
question is, are the charts playable like equity charts are, or I don't do forex, but I understand you can do that. Um, I actually like the close. I like that there's an open and a close. You know, and a period where no one can get in or out, because that's what, you know, sets the traps for me. But and but are these currencies? Are they? I mean, are they on an? I don't even know how you get them, and if you can read, you know, the history clearly for for predicting what's going to happen. And does that make any sense? The question. It's a
Yeah.
long
So
question.
there are many different currencies. As I said, there are about 5,000. Not all of these are on public exchanges. If they're not on an exchange, in order to exchange it, you have to physically find a person and then trade, which could be difficult. But on the big exchanges, for example, Coinbase, I think they're offering about 30 different coins. And there are many different exchanges that have charts. So you go to Coinbase, you go to Gemini, or you go to Binance, they'll all supply their charts, and you can find the chart that you like. Keep in mind that each exchange is its own exchange. It's not like the stock market where there's one central exchange. Cryptocurrency, there's no one exchange. So there will be slight differences between them all. Now there are arbitrage people that come in and try to arbitrage all the differences away, but you'll notice the charts are slightly different on each. You'll notice the volume is different on each. So if you're going to trade certain currencies, you might have to look at multiple charts from multiple exchanges just to get a good picture of it, and you'll have to learn your asset. I think Carl is always saying know your asset, or whatever phrase you use. So know what you're trading.
Know your instrument.
Yeah, know your instrument. That's what you say. Yeah, so you got to know your instrument. Now, from what I see, they generally move like stocks. Now, with stocks, and I'm sure Carl could totally agree with me on this, the asset moves dependent on the people that are trading. So if you have a certain group of people with certain set of psychology and a certain set of needs or demands for the market, they're going to trade certain ways. And Carl has learned to recognize those patterns. But if he goes to a different asset, you have a completely different set of people trading it, which could trade it in different ways and form different patterns. Now with stocks, I understand that you guys just jump between whatever the popular stock is of the day for day traders. And it's just the same sharks going after the same set of stocks every day. So I would assume that the personality of that stock would basically be the same every day for a day trader. Now the people that are trading crypto are generally a younger bunch. They're not the older guys that have learned their 40 years trading stocks. These are like 20-year-olds, 30-year-olds that still have no idea what they're doing, and they're trading cryptocurrency. So the patterns that you might see on the stock of the day might be very different in crypto. Now, I'm not a day trader, so I wouldn't really see any difference. But in terms of a swing trader, I don't see much of a difference in anything. My algorithms that I write, I have to have a slightly different algorithm for crypto, and I haven't fully tested my crypto algorithm yet. It's still learning. It's only been doing it for, I think, 8 months. So I do see differences in them. But I think if you've been trading stocks for a long time, a lot of people that were trading stocks moved over and started taking money away from these 20-year-olds that don't know what they're doing. And so if you go in and just watch it for a while, you'll probably start noticing the same things happening. But you don't have that crypto of the day where like stocks, it's something in the news, it's moving like crazy, everybody's trading it, and then within a week they've forgotten it. Cryptocurrency isn't like that. It's traded 24/7, 7 days a week. So you'll probably even notice certain trading patterns that happen on Fridays, but don't happen on Saturdays. Weekends might be more quiet. I generally find that the open of the stock market actually causes a lot of movement in crypto during that time period as well. So you might find some interesting things going on as well with that. But yeah, you know your asset, and it will be a little different, but the people that have traded stocks are trading crypto, so you might see the same patterns with those as well.
If we
I have
can
a
ask,
question.
if you're willing to share, what is your favorite crypto to trade? Or are you doing Grayscale or the actual coin, or what are you personally doing?
So I trade my crypto primarily on the exchange. Every now and then, if I have some free cash in my investment account, I'll do the Grayscale stuff because it's just sitting there otherwise. But if I specifically just wanted to trade cryptocurrency and my stock money's tied up, I will usually do just one of the top 10. When I get a signal, it's a market-based signal. So like if I think the whole market's going to go up, I'll then select the coins that I think will have the best potential. And I always prefer, like Rob does, is I prefer the safe stuff, the bigger stuff, not the penny stock. So I'll do the Bitcoin, I'll do the Ethereum, anything with a really large capitalization. So within the top 10, I'll look through those charts and say, okay, this one has the most potential. I'll get that. And I'm basically trading the market via a selection of stocks that I think that do the best. So I do the same for crypto. If I think crypto's going up, I'll select, say, the top 5 currencies I think will have the most potential to go up with the market. And that will be what I hold for the next period of time in that swing trade.
I have a question. I'm not a currency trader, so this may be analysis to currency trading. If you go onto one of these stock exchange or these trading exchanges for crypto, and they are offering 30 various cryptocurrencies, what are you trading in? I know stocks trade in dollars. The US stock market trades in dollars. Futures trade in dollars, but you have 30 different cryptocurrencies. Do you have, if you want to trade one of them, do you have to convert US dollars into that currency and then trade with that? How does that work?
The exchanges I use, Coinbase primarily. You could also use Robinhood. Robinhood is actually easier to get your money in. I don't like the company at all. I don't trust it. But yeah, you're trading with the US dollar. It's not like Forex where you go in between different currencies. So if I were to buy Bitcoin, I have my US dollars, I buy the Bitcoin, I pay an exchange fee, whatever that fee is, say 0.1% or whatever it is. And then when I'm done with it, I move back to US dollars. Now, I do understand some exchanges actually let you move between different currencies, like Forex. I haven't used any of those. They're overseas. They're a little more sketchy. I'm just using Coinbase primarily and some Robinhood just because it's much easier to get my money into them. Yeah, it's just US currency.
So if when I open a trade, let's say I buy a Bitcoin, I buy it with US dollars, and then when I close the trade, it automatically goes back to US dollars?
Yes.
Yeah.
Although there are exchanges where you could move to a different currency instead. The Coinbase, it's just US dollars.
Okay, now let's say, I mean, $34,000. I don't know what Bitcoin is worth today, but I know it's way up there.
40,000.
34,000, 40,000. Let's say it's worth $34,000. If I want to trade it, do I need to have $34,000?
No, you're trading fractions.
Fractions.
It's like fractional shares in the stock market. You're just buying a fraction. So if you have just $100, then you buy $100 worth of crypto, and it's just a fractional amount.
Okay, thank you.
This was really great, John. This was enlightening.
Thank you again. You've been a terrific guest speaker.